Thank you, Mark, and hello from London. Today I'd like to expand upon two products I mentioned last week and also look at a third one. The theme is still the same in all three and is the same as I've spoken about these past 2 weeks. To look at the same excessive exuberance we've seen in cryptocurrencies but in some other markets. Right, a quick look at weekly key reversals for last week revealed only two in the markets I look at: NYMEX heating oil and ICE gas oil. What's interesting, this was not the whole crack or even the crack spread in one marketplace. So I mention it more as a point of interest and no more. Now you may remember when last week I was looking at both weekly and monthly key reversals for February, I found two excessive moves. Not weekly or monthly key reversals. They were outside the criteria, but they were excessive moves. The first one was a domestic European futures contract, which doesn't trade that much other than off exchange and posted, but is used by some significant customers to gauge the state of the market. It is the EEX European butter contract, something we can clear here in London. Since July 2020 until February this year, the market traded sideways between about euros 32.75 to 34.90 with a couple of spikes that were quickly reclaimed. In late January, the market pushed up through a long-term bearish shift pitchfork, one I pointed out highlighted at the time. This is the one from 2017 to 2018 action. Then on the 3rd of February, the market punched up and out of its main trading range, that is over 3,500, and shot up to the height of the previous spikes, stabilized, and then from Wednesday 2 weeks ago until Wednesday last week, that's this time last week, prices jumped up from euros 3,600 to a high of 4,200, a jump of just over 16% in a week on butter of all things. As I mentioned last week and again today, I'd highlighted this move up in my commentaries, but even I was surprised that wholesale butter could jump up by a sixth in value in a week. Further research revealed that last year many farmers had switched from dairy to other products as the price had been so low for an extended time. Then, with lockdown, many people at home had been inspired to start baking, prompted by such shows as the Great British Bake Off, hence a dairy butter shortage. Personally, I think it was the charts. Today we're off the highs, currently at 4,050 euros, a drop of about 3.5% from the highs. The second one is an index which impacts nearly all who trade or work in commodities. I follow the Baltic Exchange handy size index. I have done ever since I brokered sugar. This size of ship is the one most often used outside of containers in shipping raw sugar from Brazil and elsewhere. The handy size ship can be roughly between about 15 to 35,000 tons, and as the name implies, they are handy. This index has been going up steadily since May last year, with a low in the $230 area, until we saw January's close of $701. Not an unusual move in this index. However, from the end of January's price at $701 through to yesterday's close of $1,181, we've seen the price jump up 68% in just over a month. Now, I'm aware that shipping prices have been very, very volatile in the past, but at a time such as this, it seemed excessive. I noted from some friends of mine in the shipping industry that for many routes, the freight forward market has dried up with these moves. Only spot quotes were available, and they were in many cases tentative. The most interesting story I've heard of actually was how cargo had chartered a Cape-sized vessel to carry grains from Santos to Brazil, probably soybeans, to Rotterdam in the Netherlands. Now, Cape-sized vessels are typically used to carry iron ore or coal, so there was the cost of cleaning the vessel to take into account. And these vessels are big. The one in question is a 180,000 ton vessel. Normally one would have expected possibly a handy-sized vessel, or more likely a Panamax 65,000 ton vessel, or a Supramax 50 to 60,000 ton vessel to take such a load. But prices in all three categories have risen due to pretty heavy short covering by agricultural trading houses. Hence it made sense, and a possible estimated saving of between $13 to $15 per ton, to charter this vessel from Ningbo in China, carrying just ballast, to Brazil and then on to Europe. though I imagine the carbon offset would be pretty onerous, as well as fitting it into suitable berths in both Santos and Rotterdam. Finally, I'd like to look at a fresh commodity which has had a fall of 14% within the last week. LME 3-month nickel has dropped from Wednesday last week's open at $18,710 down to $16,090 at the time of reading this. As a technical analyst, I put this down to the break below the combined 3-pointer uptrend, as well as the lower time of the early October, early November 2020 bullish Andrews pitchfork, both today at $18,285. The fall has been ultimately held, so far successfully, by the long moving average, currently at 15,590. However, those of a fundamental bent could see it as an outcome of the news of the Chinese company Tsingshan Holding Corporation announcing a new process to produce nickel from much lower grades of ore. They had estimated producing about 75,000 metric tons this year, with nickel being an essential element in EV vehicles. This has been welcomed, though the environmental cost may be significantly higher, as it apparently uses intense heat and produces high sulfur and carbon emissions. I'm not sure how this will go down with the environmentally friendly electric car producers. Personally, I think the move lower was prompted by the charts. For more detailed analysis of this and other products, please contact me through the usual channels. I can send you a copy of my heavily notated charts. And with that, I conclude the broadcast from London. I hope you found these comments useful.